I do think actually there was considerably more disruption coming out of the financial crisis. Certainly there were a lot of layoffs in that time frame as banks curtailed their efforts materially, and I think that ultimately was a catalyst to the explosion of the boutique side of the industry. So I think that disruption ultimately really shifted the competitive landscape in a lot of ways. And interestingly, while I think a lot of the big banks thought boutiques might take small and mid-cap opportunities away from them over time, given a greater focus on potential conflicts of conflicts of interest in larger banks, I think more and more large clients have been more comfortable working on critical strategic matters with boutiques. So it's a really it's a more diverse set of competitors, and I don't think that's changing. There will be some shakeout of some firms that ultimately don't have sufficient market share to support their base, but I think the handful of bulge brackets with many boutiques, that will continue to be sort of the future of finance, at least for the foreseeable future. Other than that, I think clients are perhaps more readily willing to spread their business around. I think it used to be the case that you expected to have certain clients for life until you declined to work with them any further. That's no longer the case. I think there's competition from international firms as well as global commerce continues to become more and more fluid. So from a banking perspective, it is a very diverse marketplace in terms of the number of competitors, and I think that was a very substantial change coming out of the financial crisis.